Good morning, everybody. Happy Monday. It's August 22nd, 2024. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites. Every Monday and Thursday morning around 8:30, 8:45, we can bring you the Daily Bites talking about the markets, talking about economics, maybe the Fed, maybe other issues as well, too, the charts, any earnings that are coming out, kind of give us a little perspective on markets, what they've done, what they may do going forward to give us a little bit of a leg up, a little bit of an edge in trading these markets. So what do we got so far this morning? Well, looks like we have the S&P futures up about 7 points. Nasdaq up about 42. They're a little off the highs of the session. Dow's up a little bit, about 16 points right now. I'm sure many of you know, unless you've been sleeping under a rock, that the Jackson Hole Conference is getting started today. It's a 4-day conference symposium, and there's going to be a myriad of speakers out talking about the economy and global issues and international economics and so forth. I think Christine Lagarde from the Euro is going to be there. I think the Japanese premier of the Bank of Japan will be there as well, too, talking this weekend. But the keynote speaker that everybody is interested in hearing his views is going to be Chair Jay Powell of the U.S. Federal Reserve. And he will be out tomorrow with a speech starting at 10 o'clock in the morning. And I suspect that's Eastern time. And I suspect that just before then, some of the highlights or the notes are going to be coming out about what he's going to be discussing. So we did have a little bit of a rise in volatility yesterday. It's receding here, but it is down to about 16%, which is really just about VIX cash is just about even with the VIX futures. Now, what's interesting here is we get closer and closer towards the election, which is in November. We can really see the inversion of the curve at this point in time. So the inversion's happening here from October down to December. It's pretty steep. But what's important is that we look at the VIX cash, which is down over here. It's going to have a tendency to pull those futures down, right? Think of the VIX as a weight, as an anvil, okay? As it pulls up or it pulls down the futures, it acts as an anchor when it's low and the VIX futures are high. So if you think of some sort of balance over here, the futures are up here and the VIX is here. The VIX is much heavier than the VIX futures. Okay, it comes down. It's going to have a tendency to bring the rest of them down with it. Now, the opposite also occurs when the VIX rises up, like it did just a couple of weeks ago. Remember, on August 5th, the VIX went up to 65, and all the VIX futures rose along with it, and we had a huge inversion in the curve. Now, that went away after about 4 or 5 trading days, but the effect of the VIX is very notable, and it's very influential on volatility futures. Now, why are volatility futures so priced so much higher in October than they are in September, or even the VIX futures and the VIX cash down over here? Why is that? Well, we have an election coming up in about 74 days, right? So they're pricing in volatility here. Now, I remember back in 2020 and 2016, and some of you who were around trading back then might recall this as well, too. We saw the same conditions occur with volatility. We saw a higher price of volatility into and through the election of those 2 years, 2020 and 2016. In effect, the market players were pricing in or preparing themselves for some chaos after the elections or into the elections. A lot of volatility, a lot of big movement, right? Remember something. What is a higher volatility? It simply means market moves are like this instead of like this, right? 16% right now. We're expecting maybe 1% move in the markets over a 30-day period. That's really low. Now, when we got up to, we were in the 20s and 30s and even in the 50s and 60s a couple of weeks ago, the markets are pricing in huge moves like this, right? And one thing that we are as investors and traders, we are all somewhat risk averse. We don't like this, right? If you lost, if you were agnostic about losing money as you are making money, well, volatility is irrelevant. Right? It doesn't matter, right? We really, if you didn't care, if you were just as happy losing $50,000 in the markets one day versus making $50,000, well, we wouldn't have any volatility, right? Because there isn't any fear of losing money or of making money. But we know that's not the point. That's not the case here in markets. So when markets ranges start expanding and volatility starts expanding, we see large drops. We see large pops up higher as well, but we see large drops, and that makes people very nervous and very scared that they're going to lose their wealth. So when we have these big pops in volatility, we have to take care and protect ourselves. But in the case of next month, and why the volatility is up there, people are just getting ahead of it, right? Now, I think that if you look back historically at these two cases in 2020 and 2016, it was the wrong move to buy volatility out there. I mean, to buy protection is not the wrong move. Okay, that's not what I'm saying. I think that once the elections were over on those 2 years, we saw a receding move in volatility. We saw volatility collapse, basically letting the air out of the tires, and volatility collapsed. And what ended up happening, the markets soared after that. Now, is it going to happen again? I don't know, but we could see the same conditions are there as there were in 2020 and 2016. So the potential for volatility to come back down is certainly out there. And if volatility comes down, we know the futures are going to rise again. So that's a little lesson about volatility and volatility futures for you. Let's take a look at the charts here for a moment. I have the S&P 500 chart up here, and you can see that we are very, very close to filling that gap from July. Let's take a look, see where that is right now. That's right up there. We came really close to it yesterday. Actually, that gap is up there on the close, so it's about I want to say 56. It's called 56.70 or 56.60 or something like that. Once we fill that gap, we could be in overbought condition and come right back down again. So this is a good time to start taking profits, building your cash, having some protection on. And you've got to have a mentality of what if or just in case, right? You can't react and respond when things are getting markets are getting pounded, right? You can, but you're going to be late. So when volatility is low as it is right now, it's come down quite significantly since the beginning of August. Why not use that opportunity, and especially when markets have been up now 9 out of the last 10 days? If they're up today, that'll be 9 out of 10. Why not use that opportunity to take some money off the table, take some chips off? If it's been a good month of August, congratulations. I've had a great month of August. My service is up 9%, and with about 7 trading days left to go in the month. So I'm very happy about that. So I'm looking to reduce my risk. I think you should do the same. I think you should start reducing your risk a little bit over here. Wait until things shake out, especially after Chair Powell's speech tomorrow, right? I don't think he's going to give the markets too much to run on tomorrow. I could be wrong, right? But in my estimation, the market has already run up in front of his speech, and unless he comes out and explicitly says, "Yeah, we're going to do 5 rate cuts in 2024," it ain't going to happen, of course. But what if he said something like that? Well, markets could be off to the races. I don't think he's going to feed any steak to the hungry lions tomorrow. All right. So that being said, right, what is wrong with buying a little bit of protection since it's cheap right now? And if the markets do decline, you've at least blunted a lot of the volatility that could be built in from a speech that is disappointing to most of the crowd. Now, is he going to hint at a rate cut? I think there's a very high probability of that. Is he going to hint at more than 1 rate cut? No. doesn't have to. It's letting the market do its work for him. And so he doesn't have to go out and say, yeah, you know what, we're going to go with multiple rate cuts by the end of the year. They don't even have their meeting yet. Their meeting's not for another 3.5 weeks, right? September. And they're going to be coming out with some new projections for the end of the year. So according to the last projections in June, they were looking at maybe at most 2 rate cuts. Of course, we've had a lot of data since then, 2 rate cuts in 2024. Markets are looking for 3.5 right now, maybe 4. And again, we remember what happened earlier this year when the markets were expecting 6 to 7 rate cuts back in January, February. The Fed threw cold water on that and said, no, you're getting way ahead of yourself. And the markets corrected big time in April. So we'll see if that happens. So I want to also show you the oscillators over here. Plus 136 on the New York Stock Exchange oscillator. 189, almost 190 on the Nasdaq, getting to a deep overbought condition on the oscillators over here. So that's something we have to be very wary of. This could turn the markets around at any moment. We saw that happen in July, came back down really, really sharply from very, very high readings in the oscillator. That was on July 16th. We were above 340. It was, I think it was the 4th or 5th highest reading ever in the Nasdaq oscillator, and came tumbling down because we got way too overbought on that oscillator. What are we looking at today? So I know there's a couple of earnings coming out. I like the chart of Meta here as well. I like the chart of Broadcom AVGO, which is up a little bit this morning. If it gets above Tuesday's high, which is around 167 or so, I think this has got some move up towards those 170, 175 level. Meta Platforms is one that I've been looking at as well too. I did a chart for the Street portfolio that'll be out later on today. You know, this is 3 times already. It's made a run at 540. I think if it breaks through 540, it's going to run. I think I see Meta coming up to 600, 620 by the end of 2024. So that's another 4 months left to go. Plenty of room to go for this one. And then finally, we have a couple of earnings reports coming out tonight, which I was looking at. I love CAVA here. I have a really great earnings report last time around, and it broke out to a new all-time high on Wednesday. Bill.com comes out with earnings. This has been a challenged stock. It was up a lot higher a couple of years ago, but it's making a nice little comeback over here. It did get above the 50-day moving average for a couple of closes here, so it might be something to take a look at. Workday is out later on today. I'm not a big fan of this one. ROST stores. Now, some of you may have seen the big move from TJ Maxx yesterday. ROST stores also, in a similar vein, made a big move on Wednesday, gapped up and held that gap higher. Now, they're likely going to report some good earnings. The chart looks great, new all-time highs here. But problem is that did it shoot higher based on those earnings that haven't come out yet? Did it shoot higher yesterday, and it's going to be a sell in the news tomorrow? So we'll see what happens. I'm not sure about that. I do have a small position in this one. I had some 145 calls, rolled those up to 155 calls for October, so I've got some of those still working. Other than that, I really don't see anything much on my radar here. Intuit comes out later on today. I'm not too interested in that one either. It's going to be it, I guess. So let's have a great day. Trade well today. And if you're in the chat room, I'll see you later on today. Don't forget, Chair Powell's speech tomorrow, 10 o'clock in the morning, Eastern time. It's going to be interesting to see what he has to say and how markets react and respond. Been watching the bond market as well, too. Bonds are off a little bit this morning, but rates continue to stay down. And I suspect that with this good data that's been coming out and the bond market moving where it is, I suspect the committee is in a really good spot right now, and they can take their time reducing interest rates at their own leisure. All right. Have a great day, everyone. Appreciate everyone spending a little bit of time with me. I'll see you guys all back on Monday morning. Have a great trading day. Have a great day tomorrow. Have a wonderful weekend. And I'll see you guys all back on Monday. Take care, everyone. Bye.